Hello and welcome to another Smaulgld live stream. It is March 21st. It is Thursday evening and it is the year 2019. And tonight's topic is Basel III, the latest gold pumper narrative. Welcome Smaulgld mug stackers and game changers. I'm your host, this guy, Smaulgld, and welcome to the No Dim Zone. Now, before we get started, let me just show you a poll that I ran earlier today, and I want to get your point of view on the poll because we don't have, as of yet, too many participants. If you go over to the Smaulgld channel and you click on community, that's where the polls generally are. We usually get about 110, 120 responses. We haven't got that many yet, but let me show you what the poll is, and it has to do with how we advertise and brand the show as we start. And in that poll, we asked the question, what should the tagline for the Smaulgld channel be? Should we talk about the red pill for the red pilled? Should we talk about welcome Smaulgld mug stackers and game changers? Should we introduce it as with your host, this guy, Smaulgld? Or should we call it Smaulgld, the No Dim Zone? Or final choice, use them all. Now we've got some comments back, and I think the bulk, the vast, if it's not a majority, it's the plurality, would like us to use them all. But we don't have a big sample yet, so we'll take a look at that. But tonight we're going to talk about, a little later on in the program, about this Basel III. I've heard a whole bunch of malarkey about this thing. Oh yes, it's a bunch of malarkey it is. It's either talking about, well, it means we're going back on a gold standard. No, it doesn't. Well, it means that the central banks are all going to be adding gold to their reserves then because of this. No, it doesn't mean that either. It means that the 1%, they get all the money and they're going to want to add all the gold. And we got to make sure that we take that from them. No, it doesn't mean that either. We will get into all this later in the program. But in the meantime, we're going to take a look at the gold price, the silver price, gold-silver ratio, equity markets, a little Brexit news. And there was an executive order today from Donald Trump on free speech. We're going to get into that as well. But let me just check the current poll results. And we got 27 votes now, which is the best tagline for use on Smaulgld. Smaulgld for the red-pilled, 26%. Welcome Smaulgld mug stackers and game changers, 22%. Your host, this guy, Smaulgld, 7%. And the Smaulgld No Dim Zone, that's 7%. And use them all, 37%. That's a little Bernie and Seamus together. Use them all, 37%. That would be Bernie imitating Seamus McGee, our Erstat host here sometimes on Smaulgld. Let me just show you those results if you are following along. Asukasa. Let's take a look then and see what it looks like. And then we will move on to the gold and silver prices. While we're pulling up this, I'm going to show you the go to the equity markets. The equity markets, Dow Jones up 216 points today, just under 226,000 at the close, 25,962. That was up 0.84%. NASDAQ up a 1.5 almost to 78.38. And the S&P 500 gained an entire percentage point as well, up to 28.54. US dollar index also went up. And there's your, so far, what's the best tagline for use on Smaulgld? Since we don't have a clear winner, and the winner actually is 37%, use them all. I will use them all from time to time. I haven't used the red pill for the red pilled recently. That comes from an interview I did with Mark Battaglia, who coined that phrase. He said listening to Smaulgld, he'd already viewed a lot of these red pill truth channels, and then he heard me, and it was a reevaluation of some of that red pill truth that he had heard. So he said you have to take that second pill, and then he said Smaulgld is the red pill for the red pilled, and I've taken it saying welcome Smaulgld mug stackers and game changers. And for those of you new to this channel, I created an entire line of mugs, and I compared mugs to a lot of the pumping stories out of gold and silver, and Mugs are definitely real wealth, not digital illusions thereof. And of course, a lot of these gold pumping stories are all game changer. Mike Maloney did a story, Gold's Game Changer, and it was all about the gold-backed yuan and some nonsense. And in that particular video called Gold's Game Changer, or the Game Changer for Gold, he actually called me out in one of the comments. He said that I made a comment that there's nothing behind this story. There's no source to it. And then he went on, sources, you want sources? I'll give you sources. And he gave me sources that had no sources. They were just news articles in which they were saying game changer and all that. Your host, this guy, well, that comes from the other day. I had been interviewed on SGT Report, and Sean, the host of the SGT Report, was asking me, why is the gold-silver ratio so out of whack? And I said, I don't think it is out of whack, and I explained my reason. I'm not going to go into them tonight. And then he said, well, what about JP Morgan buying silver? And I said, I don't think JP Morgan's buying silver either. And then that drove the silver people nuts, because they've been given a steady diet of dismalarchy about JP Morgan owning hundreds of millions of ounces of silver with no evidence whatsoever, and all this nonsense about the gold-silver ratio is unsustainable, 16 to 1, it should be, no, 15 to 1, no, 1 to 1, 9 to 1, comes out of the ground, all the stuff that they hear over and over again. And after listening to me, there were many comments, dozens of them, essentially saying, who is this guy? This guy is nuts. This guy doesn't know what he's talking about. And then Bix Weir did a video that this guy is clueless. And anyway, so that's where this guy comes from. And the no dim zone, well, that's just to take off on the, what was his name? Bill O'Reilly used to have the no spin zone. Well, we don't have these dim arguments. We have the no dim zone. All right, and then use them all is the last, and I think I'll use them all from time to time. So welcome, Smaulgld, mug stackers, and game changers. Welcome to the place of the red pill for the red pill. Your host, this guy, Smaulgld, and welcome to the no dim zone. Okay, now let's take a look at our gold and silver prices. It wasn't a really good day today, and it's not to be expected, given the fact that we've had the dollar index went up and the equity markets went up. Gold went down about $4.40, down 33.33%. So it's down 1/3%, not a big deal. And it's about 1308 right now. It closed at 1309, so it's pretty much where it closed in the after hours. Silver, same thing. Although silver did a little better today than gold. Very rare for gold to fall, but silver not to fall as much. Generally, when the prices rise until gold breaks out, gold and silver rise about the same, and then eventually silver should rise a bit more than gold. But when they fall, historically, and even in recent history, if gold falls, silver falls even more. But today, silver fell just a little bit less, but it wasn't a big fall for either of them. And silver closed at 1545. So gold's still holding at that 1300 handle. Silver had been at a $16 handle, but is now at 1544. And the unsustainable gold-silver ratio, that is the one that is the biggest echo chamber, because everyone can repeat. Silver is rarer than gold. They just thrown out and is never found again. And silver is so useful in our lives. And they just repeat this stuff, and they don't look at anything else. And the gold-silver ratio, it comes out of the ground at 9-to-1, and therefore it should be 9-to-1, and it is unsustainable. And they said this at 50-to-1, 60-to-1, 70-to-1, 80-to-1, and they don't even bother to look at the reasons why it might not be going back to 16-to-1, 15-to-1, 9-to-1, or 1-to-1. They just keep repeating themselves and saying the world is screwed up and they're the ones that got to figure it out. The markets are wrong, and it is manipulation. And when JP Morgan allows the price to go, it will go, because JP Morgan has been stacking silver, and JP Morgan has silver eagles and silver maple leafs, which is complete nonsense. It's malarkey, I tell you. I don't believe it at all. All right, then. Now, gold-silver ratio, pretty much at 85-to-1. Let's move over to the cryptocurrencies. Well, a little bit down today, but not very much. Bitcoin did fall below 4,000. It was up above 4,000 during the day. It's now at 39.76, down 1.35%. Ethereum is, Seamus would say, Ethereum is down to $134, down 2.84%. Litecoin 58.39, down almost 3%, and Bcash down to 152, down 3.27%. Let's take a look at some of our cryptocurrency stories for the day. And for whatever it's worth, I don't denigrate it, but I don't follow it. I'm not a chartist. I'm not a technical analyst. There's people who swear by it, but they're saying that the Bitcoin price charts echo a pattern seen before the 2015 bull market. I'm not going to say that's a pump story. I mean, there are people who look at charts. They believe in this stuff. They see something in the chart. That's what they're saying. Bitmain, big mining chip maker, they're going to set to deploy $80 million worth of Bitcoin mining equipment. Looks like that's going to be in China. Very cheap electricity there. Speaking of cheap electricity, a lot of talk about how you can imagine now the Green New Deal and all those climate change, climate justice people. I'm one of the climate justice people, and I'm going to do a carbon offset for all the private plane travel that I do. Yeah, and they're saying that Bitcoin is an environmental disaster because of the amount of electricity it uses, and you know that if the electricity they use isn't sustainable and they're not using wind power or solar power, whatever other power you might use that doesn't leave some type of carbon emission, that you might have an issue. Now in Montana, they're saying there's a county that's going to require crypto miners to use renewable energy. Now I understand that it is a lot of it. Seemingly is that supposedly what gives it value in some respect is the amount of work and the amount of, to solve these equations in order to, it needs a lot of computing power, which requires a lot of energy in order to verify the transactions. But then you have to ask yourself how much energy is required to operate banks. JP Morgan, considering they've got all those offices, branches, employees commuting back and forth, you got ATMs, you got travel, office equipment, in general, hot air. So I don't know if anyone's done the work on that, actually how much energy is used by the Bitcoin ecosystem at the currently, and how much will be projected to be used if the system grows, and then taking into account Lightning networks. I'm not sure, but I'm sure there's a lot of energy being used by creating money, fiat money, and running it through a fiat banking system. I just don't know if they're comparable, apples to apples, apples to orange, who knows. Now Jack Dorsey, we've talked about him before. He's a big Bitcoin proponent. Not only Bitcoin proponent, but a Lightning Network proponent. He's added Bitcoin to the Square app. They sold $50 million worth of Bitcoin in the fourth quarter of 2018, 166 million during the year. Sequential growth in each of the first all of the four quarters of 2018 in the sale of Bitcoin, even though the price of Bitcoin fell essentially the entire year, starting from January when it was at a peak of almost 20,000 to the end of 2018, the fourth quarter, when it bottomed at about 3,300. Looks like they'll probably sell more than 50 million in the first quarter of 2019. But Jack is behind it. He received the lightning torch. He's now saying they're hiring 3 to 4 crypto engineers and one desire to work full-time on an open source contributions to the Bitcoin crypto ecosystem. This will be Square's first open source initiative independent of our business objectives. He's trying to make it sound like he is donating his money and time, not for the benefit of Square, but just to benefit Bitcoin. That's quite an endorsement, but that's Jack Dorsey. All right, what else do we have in the Bitcoin, Litecoin, whatever here? It looks like Lightning Network has solved some of it's kind of technical. I'm not going to go into the details here on being able to open channels, use channels, and essentially be able to use the Lightning Network. They've sorted something out. They have a loop feature now for the Lightning Network. I'll leave you a link if you want to read about that. This I would probably have included in Moronica. This is Rahm Emanuel saying that cryptocurrencies will save countries in financial crisis. Now, he's the one who's famously been known to have said, don't let a good financial crisis go to waste. And now he's saying that Bitcoin will be useful in a crisis for many countries. Now, we don't know which countries he's talking about, but he did say that. And finally, in the crypto space, we've got Swiss Parliament approving a motion for cryptocurrency regulation. This is a trend nationwide. There's a couple of countries that have tried to ban Bitcoin, make it illegal. But for the most part, most of the countries are looking to, the United States included, to provide a regulatory structure, tax structure, and so on to facilitate the growth. Free speech today. Very important. Donald Trump finally issued an executive order and held a press conference. He says, we're here today to take historic action to defend American students and American values. In a few moments, I'll be signing an executive order to protect free speech on college campuses. I listened to the 24-minute presentation. He gave the speech himself. He signed the order at the end of it, and he had, I think, 3 young ladies come up and talk about their experience on campus where they were not allowed to speak. They were told that they had to go to a designated safe space zone, or people were triggered and you have to put up a trigger warning. And Trump basically said, I haven't seen the text of the executive order. I looked in the Federal Register. It's not up yet. If I find it, I'll report on it tomorrow. But what Trump said was that these universities and colleges that are receiving federal aid would not get it if they act in this behalf and do not allow free speech. Remember what Twitter, Facebook, Google, universities have done is they have instituted free speech guidelines, or speech guidelines. I'm going to call them free speech guidelines that do not comport with the First Amendment. They comport with whatever they decide. Just so, for example, I don't want to get into a long discussion on free speech, but you can kick someone out of your house for saying hello, because the First Amendment applies to the government. The government's not allowed to curb your speech other than if it somehow violates some other fundamental right. So as long as no rights are absolute, and the classic example that they give is if there's no fire in the theater, you can't run in there and start screaming and yelling fire. Why? Because A, it's false speech, but it's not because it's false. It's because you're now infringing on somebody else's. You're creating a panic, and you're infringing on the people who paid to be in the theater, and you've basically taken away their right to see the movie when there's no fire. So free speech, no rights are absolute. There's always some type of, if there's a compelling government interest to restrict the right, they can restrict the right. But the free speech, First Amendment rights have not been so restricted, even by constitutional analysis, constitutional cases. For example, the Supreme Court has ruled recently that there is no such thing as hate speech that needs to be restricted by the Constitution. In fact, the Constitution actually protects hate speech. However, Twitter, Facebook, YouTube, college campuses will try to restrict what they deem as hate speech. Now, not to get into the big argument, public company, private company. Well, let's just push aside Twitter, Facebook, and Google or whoever, and say, without trying to make them quasi-governmental actors, we can say that they're private companies, and their argument could be that this doesn't apply to them. The First Amendment doesn't apply here. They're not government actors. There are arguments to bring them under that fold. I'm not going to get into that right now. However, it's clear for universities that if they're receiving federal funds, that one of the conditions that the federal government, who is essentially the standard bearer of the First Amendment, can say, we're not going to give you any money unless you follow the Constitution. Because if you are a private university, and let's just say that you can be a private university and somehow not be a quasi-governmental actor or have some type of quasi-public space, but you're totally a private university, well, then you can enforce your own speech codes. But what the executive order does today, and I haven't seen the text, is it says that if you do not abide by the Constitution and allow free speech to take place, obviously within constitutional grounds, but they can't just say, for example, there was one of the students had handed out Valentine cards, and they said on them, Jesus loves you, and they told them, no, you can't hand that out. That's going to offend some people. They're going to get triggered, so you can't do that. Well, the idea of the First Amendment was, I mean, they weren't using the word triggered back then, but it was meant to protect speech that might trigger people. It was meant that it was designed so that you can have a healthy, robust, and maybe contentious political dispute or debate. It wasn't meant to be, it wasn't meant to protect your ability to go out and talk about the weather. It really was meant for you to go out and talk about things that may be controversial, because they understood if you were to have a democratic republic that was essential that all points of view would get aired. What the universities want to do is they want to create a cocoon of, I wouldn't call it liberal arts education, I would call it leftist arts education, and they really don't want to hear these other ideas. They don't want to hear about Jesus loves you, and a lot of people don't want to hear about Jesus loves you, but that's not the point. The point is, if you have a right to say something, and just being offended by it really is not a reason not to say it. Now, there are restrictions on free speech. There's a difference between being upset or offended by something and something being a threat. Like, you can't go on campus and start using your freedom of speech and say, I'm going to kill everybody, and then explain how you're going to do it. Well, obviously, that you don't have First Amendment rights to do that. They're restricted by the fact that you're a lunatic, and you need to be be quieted, and you need to be questioned as to what your motives are. But what they've done is they've actually gone perverse in that if you say you want to bring someone on campus who's going to say something, not going to say something, I'm going to kill everyone on campus, but say something that they deem offensive, what the universities have been doing is saying, well, we can't have that person here because not only will people be upset or offended or triggered, they will riot, and we can't guarantee the safety of the people here. So you're giving in of the speaker who may say these offensive things. So they're giving into, they're saying, well, we can't have free speech because a lot of people will be offended and there might be a problem. Well, that's really up to the university to decide how they're going to deal with it. And the effect of the executive order, from what I understand, is if they don't make accommodations for free speech, then they won't get federal funding. Now, I haven't looked into the constitutionality of the president doing this and how money is allocated to universities and so on, but it certainly is a very interesting issue. And we'll follow up with, when I see the executive order, I'll give you my view on whether it's constitutional, how it will be implemented, if indeed it can be implemented, whether there'll be lawsuits against it, I don't know. All right, and finally, Brexit, the never-ending Brexit. I don't even know if this is up to date. I didn't check in the last few hours, but remember, the day that they're supposed to leave is March 29th, and Theresa May was saying, we're leaving on March 29th, full stop, full stop. She kept saying it. Now she's like, how about an extension? EU says, yeah, we'll give you an extension, but you got to take the deal we gave you last time. Well, what good is that? And now the EU is, looked like they were saying a few hours back, the EU is poised to insist on withdrawal no later than May 22nd. I think the EU is finally fed up with all this. They're not going to be able to get the Brits to do what they want. And so now they're just like, leave, and whatever they have to pay, they have to pay. I think what they don't want, and this is just my speculation, labeled as such, that the EU does not want on their hands that they're too heavy-handed, and that if a country votes to leave, that they force them to stay and become a vassal state, because that'll just rile up Italy and a bunch of other states. I don't think they want that. And this really is more on the, if you think about it, it's less the EU, it's more the ineptitude of the Brits of executing on Brexit. They voted for it. The Conservative Party Prime Minister resigned because he was for staying after the referendum showed that the Brits wanted to leave 52-48. Then they brought in a new Prime Minister, Theresa May, who also was not in favor of it. So she's done a botch-up job of trying to negotiate an exit deal, and now she's trying to extend it. And I think the EU is saying, we've had it with you guys. You know, this guy, you got to go. And somehow she survived a no confidence vote, but she got her clock cleaned on a couple of votes where they didn't like the deal that she had struck, and that wasn't just from the Conservatives, Labor and Jeremy Corbyn, they didn't like it either. And now Merkel weighs in. She's pretty annoyed. She says, get out. So I don't know how all this is going to come out, but it's been a very long and arduous process for the Brits on this, whether to stay or go, and how to go if they're going to go, and so on. All right, now let's take a look at this Basel stuff. I mean, I've heard, and I wasn't even gonna cover this, but it seems that it starts to get covered, and then the pumpers come out and they start saying all kind of stuff, and they don't necessarily know what they're talking about, and they got to say something. Maybe I'm in that category too, but I'll give you my views on this, and I'll explain first off what it is and why it actually is something. So it's not like I'm dismissing, but I'll explain why. Okay, first of all, you have to know what the BIS is, the Bank of International Settlements, and what this Basel thing is. The BIS goes way back to, I don't know, 1930s or so. It's a group of countries. They decided how to handle reparations. So it's an international organization. But the main thing about what they do today is they are there to facilitate the banking system and to make sure that the international banking system has the right, the participants in the banking system have proper capitalization, proper capital adequacy, and they do the stress test to make sure that these banks are not just sustainable in good times, but they're sustainable in bad times. So what Basel III is BIS, Bank of International Settlements, came up with this after the financial crisis. They're trying to come up with ways to improve the capital adequacy requirements of the banks. That's the main thing. So one of the mistakes that we hear a lot of is, and somehow they tie this to central banks. It has nothing to do with central banks. The purpose of Basel III, it's a voluntary, it's not even mandatory framework to try to figure out and make sure that the banks in the system have proper procedures in place to know, do they have the right amount of capital based on the type of business they do, the type of loans they give, and so on. Okay. First of all, it has nothing to do with central banks. Here's why. They're not saying central banks are buying gold because of Basel. No, they're not. Central banks are buying gold for the reason that we've talked about in the past. And when a central bank buys gold, we've seen this. They market to market. There is no, well, now they can say that the gold is worth this much. No. Central banks have always, when they've added gold to the reserves, nothing to do with Basel III and new gold standard and game changer, whatever the nonsense you're hearing, central banks aren't buying gold because of Basel. They've been buying gold for the reason we've talked about. Russia's buying gold because they are under sanctions. Russia's buying gold because they have the third largest gold mining production in the world. Russia's buying gold because they have no need to have dollars in the same way to hold treasuries, perhaps the way other countries do. Why hold treasuries when you can hold gold and you have a gold mine in your backyard? Kazakhstan buys gold. Why? 77 months in a row. They also have started increasing their gold production from 20 tons a year to 80 tons a year, and now they add 50 tons of that to their reserves. Lots of countries have started adding gold. Has nothing to do with, well, now that it's going to be a tier 1 asset. No. A central bank could always add gold to reserves and say they have, for example, we talked about this yesterday, Russia has about $90+ billion worth of gold based on current market prices. Now, how could they come up with that figure? Because Basel III hasn't been initiated. That doesn't start till April 1st. Because it doesn't apply to central banks. That's point one. Central banks have always added gold and booked on their balance sheet the value of the gold at the end of the month. Period, full stop, end of story, whatever these guys say. Okay? The central banks have always added and have marked the gold on their balance sheet based on the market price. The change that they're talking about here applies to banks in the system. And what they're going to allow to do is keep it as a 0% risk asset, and they'll be able to market to market. Now, again, they're saying, well, then it's game over and game changer. And Mike Maloney was saying, well, this means they're really saying that we should be on a gold standard. I don't know how you get there. No, it doesn't. It doesn't mean we should be on a gold standard. It means that they're saying that a bank that holds gold, which most banks don't, but they're going to because of Basel III, and therefore it's going to skyrocket. No, hold on. If you are a bank, just think this one through, and you're a crappy bank, meaning you don't have good capital adequacy. Well, you can't go out and just go and buy gold. You don't have the capital adequacy to buy the gold in the first place. So it's not like they're all going to go out and buy gold because now they can. They're trying to get their cash rates up. Now, the reason is somewhat important is for a bank that does have the proper capital adequacy, it would be prudent for them to take their additional cash, and if you can mark to market the gold the same way, well, it wouldn't hurt to have a little gold there as a hedge, obviously, because if the currencies or the cash that you hold go down, you might as well have a more broad portfolio. If it all counts as the same towards your capital adequacy, why not have some gold? There might be an issue where gold has another dramatic rise. Remember, for the most part, the cash and cash equivalents that banks hold, they don't hold Kazakhstan tenge. If they're going to hold stuff, they're going to hold the major currencies. But as we know, a major currency can take a hit, like the euro, like the biggest currencies that are held by central banks right now, and not necessarily private banks, but you get the idea that these are the ones that are the most in demand, are the dollar, the euro, Swiss franc, Australian dollar, Canadian dollar, Japanese yen. Those are the big ones, and a little bit of Chinese yuan, less than 2%. So if you had a choice as a bank, not a central bank, but as a bank, and you're looking to have your capital adequacy tested, you might want to add some gold. Now, none of this is new, though, because the FDIC already includes, that's the Federal Deposit Insurance Corporation. If you look in their general instructions and you look at, no one does this, they just repeat stuff that they heard somewhere else. They do include that, I'll read to it right here, assets and credit equivalents. This has nothing to do with BIS and Basel and March 29th and game over and game changer. And central banks are buying gold because they know it is coming. They're buying hand over fist. And Mike Baloney, we're on a gold. This means we should be on a gold standard. None of that. This is in the FDIC. It says assets and credit equivalent amounts of off-balance sheet items assigned to the 0% risk category, and they include, number 5, gold bullion held in the bank vaults or another vault on an allocated basis to the extent offset by gold bullion liabilities. This is the exact same language which is in the Basel as well. It's nothing new. Central banks already mark to market gold to market. It's however much gold they have, whatever it's worth, they put on their balance sheet. We talk about this every time we report on central banks' gold. This is how much gold they have. This is how much it's worth. And I always point out, this is how much it's worth, meaning that it's not really worth that much. Even Russia, with that massive gold hoard, 2,500 tons, it's only worth $90 billion. What it does highlight, though, and this goes to your gold-silver ratio is unsustainable. They do talk about gold as an asset that you can count on. Oh, but silver has been money for 5,000 years, and silver is so useful in our lives. Yeah, it means nothing to these banking standards, either central banks or private banks in the financial system. This is, I'm sorry to the one-to-oneers, gold-silver ratio, this does give gold a significant leg up on silver. A bank can include it. Central bank, commercial bank can say, I have X amount of gold equaling X amount of nominal dollars. They cannot do that with silver. That's a very important point. It was glossed over. No, it doesn't. this guy is clueless. He doesn't understand. It's got nothing to do with that. They know that if they were to buy silver, it would be a game over for them. They get blown out of the water. No, they would never buy it because if they bought it, they couldn't include it on their balance sheet. Oh, but Russia, we saw the pictures of Russia buying gold, buying silver. Yeah, but they don't put it on their balance sheet. It doesn't mean, again, that silver doesn't have value. Never said that. It means that silver, under these regulations, whatever they are, whether they're the European interpretation of the Basel rules, the U.S. interpretation of the Basel rules, they do not include silver at all, full stop, as Theresa May would say. So it's got nothing to do with the central banks or the banks are interested in keeping the price down because they know storing silver as a store of value would get them immediately blown off the face of the earth. Reason is silver is the keystone to running the unbacked monetary system, comma, Lewis, you should know this, but he just doesn't get it, so says Bix Weir. Have that line memorized. That is about as moronic as you can get. Central banks and other banks do not hold silver for the reason is accounting. They cannot include it on their balance sheet as an asset. So there is something to this BIS thing, this Basel, that the banks can hold and count the gold that they have on their balance sheet. However, it's all about capital adequacy. Gold, if you don't have capital adequacy, it's not because you don't have gold, it's because your bank sucks and you don't have any cash. So converting your cash into gold isn't going to change the fact that you don't have capital adequacy. The only thing it might help is if somehow the day that you switch your cash to gold, that somehow gold goes up 30%. Well, then maybe you get in under the capital adequacy requirements because you now have more capital. So that's what you have to look at is, first of all, is it helpful? I would say it is a net positive. It's not a negative. It clearly is not a negative, this development. It means that banks should have, not central banks, it had nothing to do with central banks. They already were able to add gold to their countries. They can do what they want. They can say how much gold they have, and they can say this is how much it's worth. It's for banks, if they want to add gold to their reserves, it will be included on a even keel with cash, which is fine. Which means that a well-capitalized bank may decide, should decide, I would imagine, maybe to sprinkle a little gold into their portfolio. So yes, it is a positive. It is not the idea that the Basel is saying, as Mike Baloney says, that this means we should be on a gold standard. No, it doesn't mean that at all. And it's not why central banks are buying gold. They are buying gold hand over fist. No, they're not. That's not why they're buying gold. Anyway, so you can see what's going on here. But this isn't the latest of the stories of COMEX default, Shemitah, sovereign size gold buy, gold back yuan, game changer, petro yuan. All these stories shock the world. Well, this, in some circles, Basel III is getting the whole, on April 1st, it's game over, game changer. They're recognizing gold is money. Okay. Well, a lot of the silver pumpers are pumping this. It has nothing to do with silver. In fact, it's a smack in the face to silver because they don't recognize silver at all. Full stop. All right, I think that's about all you need. That is all you need to know about Basel III from this guy. But again, they have to have the liquidity in the first place, these banks. So a bad bank isn't going to be made better by adding gold. All they're going to do is they're going to swap their cash at $10 million to $10 million worth of gold. And it's possible that gold goes down from 10 million nominal dollars because the price in dollars may go down. So that hasn't helped them at all. It's actually hurt them for moving into gold. However, I would imagine that some banks may decide to add some gold and to hedge their bets. But it's not like now central banks on April 1st are all going to buy gold because there's nothing to do with them. And it's not like all the banks that are subject to these are voluntary rules, by the way. They're not even mandatory. So this is not that big of a deal. However, again, it is definitely not a negative for gold. It is certainly somewhat positive, and it clearly indicates that it's gold, not silver, that has its place in the banking system, is recognized by money, by banks and international finance as money. All right, that's all I have to say on that. I may look into it further, but I will just have to follow what happens. Let's see, where are we? All right, what do we got watching? What do we got? Okay, let's try to roll through these comments here. Trace Young, the only game changer for PMs will be the moment that it becomes more profitable for the banks to let the price of gold and silver to ride than to continually press the price of gold and silver. Now, there is a point here, but there's really not. Trace, forget silver. I'm not saying that dismissively. Silver has nothing to do with the banking system, so just toss that out. Gold, the argument is that if banks, not central banks, because central banks can already mark the gold, and they do, that they have on their balance sheet to market. But if regular banks, commercial banks around the world, big banks, small banks, can list the gold as a tier 1 asset or just market to market, it's a 0% risk asset, well, then they'd want the price of gold to be higher. Because the higher the price of gold would mean the more assets they have, the more they'll be able to meet their capital adequacy test. Correct, Trace? Okay. But that assumes that those are the banks that somehow can manipulate the price of gold higher in order for them to help meet their capital adequacy test. So now you have to ask yourself the question, is it central banks that are manipulating the gold price lower? Is it the commercial banks like JP Morgan that are manipulating the gold price lower and the silver price? So who is it that's actually doing it? Well, and why are they doing it? Even if there's some incentive. So first of all, JP Morgan is not going to boost the price of gold, go out and buy gold, boost the price in gold and say, see, we're okay under Basel III. They're already okay under Basel III. So they don't need to prove that to anybody. So if the reason they're manipulating gold down, as some people say, is because they're doing it on behest of the government to make sure the price of gold is lower versus the fiat currencies, well, they're going to continue to do that. It's not like you're going to make a fortune boosting the price of gold and saying, look, we've got a little gold on our portfolio. Remember, JP Morgan has trillions in assets. They're not going to make any money by saying, well, we have a little gold extra in our portfolio and the price has gone from 1,300 to 1,800. Look how genius we are that we did that. That's going to make no impact whatsoever on JP Morgan's balance sheet. So it's not really, Trace. The idea, though, is that there's less of an incentive to drive the price down if the incentive is that they make money driving the price down. But most people would tell you the reason the price of gold is suppressed is not it's not based on financials. It's based on they want to keep the price of gold low versus fiat currencies. But it's a good point. All right. Let's see what else you got, DB Stupid. Tracio, not sure how true the reports of central bank gold accumulation are, but if true, I would expect the price of gold or silver to rise sooner rather than later. Later, says Trace. I think you want to say, I would hope the price of gold and silver to rise sooner rather than later. Sean Saylor, CBs don't stack silver because they know if they did, it would be immediately wiped off the face of the planet. Lewis doesn't understand that. Wow. Sean also has memorized the famous Bix Weir quote. Yes, I should know this, but I don't. And he seems to be a monetary guy, and he doesn't understand all this stuff that he makes up. Okay. Gold reserves don't mean much without third-party verification, says DB Stupid. What does that mean? So, it actually, here's the verification. What good would it do Venezuela to say we've got 6,000 tons of gold when they don't? Because when push comes to shove, what happens? Venezuela is going to have to pay its debts, and if it doesn't have the cash, it has to sell the gold. If it doesn't have the gold, doesn't have the gold. There's your verification right there. So when Russia reports the amount of gold it has, it doesn't help their currency, it doesn't help anything. It's gold that they know that they have, that they can use in an emergency. It's a reserve. That's why they have it. People get too excited about a report of how much a country reports. It's really not in a country's best interest to misstate all of its reserves, because first of all, if you're known as a country that misstates your reserve assets, that's going to harm your... There's very little upside to doing it, and it's going to harm your currency if they don't trust your financial reporting. That's why this whole nonsense about China's lying, the People's Bank of China is lying, they've got more gold, they're playing Sun Tzu, and all this other nonsense, and malarkey, as Seamus would say. No. The People's Bank of China probably has exactly the amount of gold they say. The rest of the gold is somewhere else in China. Same with the Reserve Bank of India. They only list 680 tons. It doesn't mean India's lying. It means the Reserve Bank of India has 610 tons of gold, and the People's Bank of China has 1,875 tons of gold. There's other gold in the country, but it's not on the People's Bank of China or the Reserve Bank of India's balance sheet. People they've really done a disservice to you. They just make up all this stuff. They tell you this stuff. They repeat it. Everybody else repeats it. Then they get you to repeat it. And then they call anyone who disagrees with what they're saying a misinformation agent or a shill. I think it's the other way around. All right. What else? Legal tender. Don't worry, Smaulgld. The banks charge fees to cover costs. Reduce Smaulgld mugs carbon footprints now, says Trace, and I agree with him. Jack, wow. Good call, Small. How much energy does it take to run a bank? Also, people driving there cost time and money. That's right. If 0 Point Energy is ever released to public, would all cryptocurrencies become worthless? It's a very good point, Trace. It's possible, yes. But so would a lot of other things. I mean, it really would be a financial disaster. Absolutely. Because so would airline stocks, Trace, right? I mean, think about all the things that would become worthless. So it's nothing to hope for. Oh, I think we can kill cryptocurrencies if we just enforce the Green New Deal. And that will end cryptocurrencies, and people will go back to gold and silver. No, then they will. All right, what else? Coins AZ, Smaulgld. Hi, yesterday when I mentioned, but you do this a lot. I usually misquote you or something, and you have to clarify. But let's see what you got today, Coins. Hi, yesterday when I mentioned buying groceries with silver bars, I was being completely facetious. Yes, I knew that. Sorry, that wasn't obvious. I should have put a smiley at the end of my comment. Yeah, I understood that. All right. Coins AZ, hello, this guy, muggers. Well, that's a good one. This guy. All right. DB stupid. Mine was $40. I did a vid on it. Oh, I got to check it out. Very good. Very good. Ann is here. Prashanti girl, wind makes everyone agitated. Yes, indeed, it does. All right, you guys are all greeting each other, saying hello. Nice group we have here. Big assets rules for the private central banks. Yes, but the banks have already been counting their gold as a full-on asset. Agree, Fiona. Best gang on YouTube. Yes, indeed. All right, what else? All right, let's see. We got a lot of stuff here. Trace. Banks will buy all the gold they can to get their hands on if they know the price will be manipulated up. Well, how will they know the price is going to be manipulated up? Remember, well, here's the fantastical situation. They just all abandoned the fiat. Remember, if a bank has $100 million in capital, and let's say every bank has $100 million in capital, if they all switch over to gold, they switch half of their stuff to gold, that would mean that the other half that they leave in cash is going to go down. And it would go down correspondingly to the amount of gold. So let's just use dollars. Price of gold, let's just say it's $1,000. And make very simple numbers. You're a bank, you have $2,000. So what do? You switch over half of your $2,000 and you put $1,000 in gold and you have $1,000 in dollars. And now you've got an incentive for the gold price to go up. So then it's going to be game over and game changer. So when the price of gold goes up, what happens? You've got $1,000 in gold and $1,000 in cash. Your cash goes down and your gold goes up, equaling a zero-sum game. I repeat it again. Your gold goes up and your cash goes down. You haven't gained a darn thing. So they have no incentive to do that. The only reason they have an incentive to do that is if they are hoping that gold goes up because its gold is set to skyrocket and I saw it on YouTube and they're going to just let it ride and then they're going to get a gold standard and I'm going to be rich and I'm going to buy a city block in the new paradigm and then silver will go higher because gold is going higher. That's not how they think. All right, let's see what else we have here. Well, it's actually a good bad example to comment on some of this stuff when people criticize this guy, because unfortunately so many people, they just believe this stuff. It's somewhat disturbing because these are the same people that think they're woke and they're not sheeple, and yet they swallow some of the largest bit of malarkey I've ever heard of. It really is a bunch of malarkey. All right then. Where's Louis now? Louis is not even here anymore. Am I the only one who doesn't want gold to skyrocket? Yeah, exactly. Cheap gold and silver means you can collect coins and other cool stuff. Yeah. You can even buy silverware if it's cheap, and you can't do that if it's expensive. All right. What else do we have? I think there's so much here. Don't want to miss any good comments here, but I can't get to them all. As you know, you got to put Smaulgld if you really want me to see it. Trace Young, I agree that fiat eventually goes to zero. Never heard that one before. But markets can remain irrational much longer than most people can remain solvent. Never heard that one before either. That is Keynes. I like to say markets can remain manipulated much longer than people can remain solvent. Max Headroom, let's see. At least the hype is educating more people about international finance control machine Basel III. No, it's not. It's actually miseducating people and just giving them false hope about game changers. And I don't know if it's better to be uneducated than miseducated. I guess it's a personal preference. I think it's just better to be totally ignorant. All right, what else do we have here? Banks will buy all the gold they can. No, that's not true. What else? Basel III treatment of gold as a zero-risk asset is significant, insists Trace Young. Whether or not this is a game changer is a different matter. Well, we've already gone through what the significance are. Clearly, it means that gold is a financial asset, and silver is not. That's what I get out of it. And it does mean that if you have a choice whether to hold cash or gold, it's a decision you can make, and it's neutral to the extent that you don't have to worry about it impacting your capital adequacy. So if you're inclined maybe to think that this is a year to hold a little more gold than cash, then you hold gold. That's the significance of it. I don't disagree with that at all. Salivate metal. Hello, my friend Lewis. Multitude of gratitude. All right. Let's see. Silver stacker for life. Well, if they say this is the year, every year after year, yes, they are pumpers. It is the year. That's what they say all the time. It's unbelievable. DB stupid. Now, there's a good point. How can central banks value debt instruments that can't be paid? That is a very good point. They actually count debt assets as debt liabilities as assets. But it's not that. I mean, if you think about it, if you owe me money, if you owe me $1,000, I should be able to put down on my plus side that I'm getting $1,000. Now, you may be a deadbeat, not be able to pay me. Well, then they've got to consider that into there. But what they do is they do this little trick that, well, Treasury, U.S. Treasuries, they're always going to get paid. They're the safest, most liquid security in the world. So they put them down as an asset. All right, silver stacker for life. Yeah, I'm a stacker, but to me, I'm not going to go buy it into all the crap no more. Well, I'm very happy with silver stacker for life, because silver stacker first came to this channel just spouting a lot of the silver pumper stuff, and I think he's had to listen to the Smaulgld game changers here and myself, and he realizes a lot of people take what I'm saying as hostile. It's not. It's not hostile to gold or silver. As Salivate Metal says, gold and silver sell themselves, which is true. I'm not hostile to gold and silver. I'm hostile to these pumper stories. Yes, yes, indeed. Nevertheless. All right. DB Stupid's on the way out. Yes, Salivate Metal. I think your video content is excellent on whole. I'm glad you're making worthwhile content. Absolutely. He produces a prodigious amount. Salivate Metal. Now he's gone. He didn't get to hear all my good comments. All right. Well, Lewis, can't the value of currency go up concurrently while the gold price goes up too? That is true. Depends. We've seen gold and the US dollar go up concurrently, but when the dollar index goes up, it is at the expense of other currencies. So it's not a one-to-one, but that's true. But in general, my example it's not as simple as if you buy $2,000 worth of cash, or you have $2,000 worth of cash, and you split it gold. You take half of it and you put it in gold, and the other half you leave it in cash. And in the case of its dollars, it's possible that if gold goes up, the dollar will go down. It's a zero-sum game. It could possibly be a plus-plus game. But let's say you had you split into three. You had dollars, euros, and gold. Chances are, if gold is rising, at least one of the two currencies is going to go down. Have a think on that, Coins AZ. I think the idea that somehow they're going to have this incentive just to let gold rise. At some point, if gold rises 20, 30%, remember, the major currencies don't do that, then it's going to be at the expense of the other currencies. Does that make sense to you? Okay. Trace, forever hopeful. Banks wouldn't mind loading up on an asset while it's cheap if it becomes more valuable in the future. Yeah, but if it's going to mean that their other assets are going to go down relative to the gold, then what good is it? All right. And there's another point. You're right. Banks have kept the price of PMs lower to support the dollar. Well, they're going to want to support the dollar if they have dollars. Do you think they're all going to switch? They're going to just take 90% of their and just switch them all into gold? That would not be good for anyone other than people who hold gold. All right. Let's see. What else do we got? Sean says the red pill for the red pilled is excellent. All right. Yeah, they're all good. Prashanti girl, Smaulgld red pilled me on a free market and money being superior to just a government decreed gold standard. Yeah, a lot of gold bugs. They're big libertarians, big free market people, and they want a gold standard. Like, so you want to give governments total control of the gold. When we had a gold standard, they set the price of gold. The governments did, and you couldn't own it. I don't know if that makes sense. Maple Hedgehog, I'm relatively new to your channel, so if central banks don't consider silver as a physical asset on their balance sheet, am I fooling myself in thinking I have a physical asset in my hand right now? No. It's just how it's valued. Central banks don't value your mattress either. That doesn't mean you don't sleep on a mattress. They just don't list mattresses on their balance sheet. That doesn't mean a mattress isn't worth anything. Doesn't mean you don't sleep on a mattress. People ask these rhetorical questions like they're supposed to be gotchas or something. I'm not saying he's doing this. But it's like Ron Paul. Well, somebody just decided that to revoke that law of money, that gold's not money. There is no law that gold is money. Well, now there is. Well, that's not a law. It's a regulation. Yeah, a lot of people say, well, if silver's so useful, how come? Who said it was useless? Who said it had no value? All I said was it's not recognized as money. You can recognize it as money all you want. What creates value is not you or me. It's markets. And it's other people, unfortunately. It's like the value of your home is based on the behavior of your neighbors to a certain extent. All right. Game over. Game change. I have a lot of patience for this stuff. Uh-oh. Trace Young, banks realize that faith in fiat is fading. See, no, they don't realize that. They believe, see, the way you believe in gold and silver because you watch all these channels, what do you think they do all day? They don't watch these channels. They believe in what they live in. Everyone believes what they live. Central banks actually think that what they're doing is the most valuable thing. They're not thinking, I wish I had some more gold, because if they did that, they'd all be buying gold. They're not. This whole idea, central banks are losing control. Once they understand, they don't understand anything. They know public loses faith in fiat. Yeah, then they're going to want chocolate. The public doesn't even know what gold and silver are. The people convince you that on the pumper channels. They're going to rush to gold. I don't think so. He's the flipper mattress. All right, I'm sorry. I got to get going to that guy mug to mattress ratio. All right, everyone. Well, thank you very much for joining me tonight. And I do want to thank, I did get some checks in the mail. Literally, checks in the mail. You can support Smaulgld by check. You can join Patreon. You can send a one-time donation via PayPal or donate via Bitcoin or Litecoin. Or just send me your good wishes. Buy a Smaulgld mug. Start stacking mugs. And I do want to thank the people who bought the This Guy mugs and the This Guy t-shirts. Please, when they arrive, send pictures. We'll post them here. And have a good night, everyone. And very good comments. And thanks for sticking with me here. Trace makes a good point. Not everything banks do or not do is a game changer. That's right. And they're worth commenting on. Absolutely. But what I try not to do is put the old hopium on it. Oh, this means banks are going to do this because they know. I don't think so. I really don't think so. Again, my final words on Basel, it is not negative. It's positive, and it does highlight that gold is recognized, still recognized as a financial asset. Full stop.